Hello, hello. Friday. It's over. We're done. Roller coaster week. That pic of J Pow was terrifying. Should I change it? My editor made it. I thought it was kind of slick, but we could change it. Guys, what a week. Was not easy. It's never particularly easy in the market. There's always a million things that you have to worry about, right? But man, this week really tested conviction, patience, skill, everything. We had the NVIDIA ER come out and completely just pull everything up. But the FOMC minutes came out prior to NVIDIA, and the market looked like it wanted to sell off of the idea that maybe interest rates were going to either stay higher for longer or they were actually going to increase those interest rates. A lot of back and forth. But realistically, if we take this to the weekly, we're going to look at the intermarket analysis in a second here. But if we look at it on the weekly here and we turn this into like a line chart or something, this doesn't look like a necessarily terrible weekly close. It's not the best by any means. Weekly doji here. Dojis are inherently indifferent candles, right? There's no real bull or bear bias. But if the trend is up, then obviously the bias has to be slightly up, right? For those of you that like trading candlestick patterns, this is not a negative candle on the weekly. But I don't want to sit here and fill you guys up with a bunch of hopium. It was definitely not a great week. As a matter of fact, if we flip over to Koyfin here and we look at it, it was not a great week. It was kind of an agnostic week, to be 100% honest with you. Bitcoin up, crypto up in general. We just hosted a talk about this at 11 a.m. Eastern. It's on the YouTube. Our lead crypto analyst in TTI, Josh, and I sat down for 30 minutes and talked about Bitcoin, Ethereum, crypto's market cap, some of the altcoins we were looking at. Really good stuff. I highly encourage you guys to watch that. But Bitcoin up 5.5% on the week. The Qs ended up gapping up and actually pulling back today, right? So NVIDIA's earnings came out yesterday after hours. The market loved it, or 2 days ago, on Wednesday. The market loved it and then sold off yesterday. And we really thought that, man, if they wanted to kill us, Friday would be the day they were going to kill us. And they didn't. As a matter of fact, the Qs rallied back up and they closed up on the week 1.38%. The S&P 500 just barely at 0.03. And then we have a bunch of assets for the first time in a couple of weeks that actually ended up closing down. This was not necessarily the worst week. It feels worse than what it really was. But I don't want to sit here and paint a pretty picture that it was great. It was not. I think the one thing that I'm most worried about, at least in this particular table here, is that emerging markets, particularly China, really got hit this week. Some of the Chinese plays that we were able to open up and turn free are now down right now, but there's no risk against our account capital, JD, etc. And then a couple of these Chinese plays that we opened up are actually just straight down right now. They're not necessarily stopping us out yet, but it's definitely cause for concern. We might be getting stopped out if China wants to continue to break back down, which is just a total change of direction from what we've seen over the last few weeks. So emerging markets getting hit here. Then also something that we don't see here, which I want to touch upon really quick, because this is going to be a markets in focus video, so we're going to go a little bit more in depth than just the regular market updates, is transportation sector, right? This idea of the Dow theory where the industrial averages and the transportation averages start to diverge. Well, they've been diverging for a year now. Does it matter? Will it eventually matter? And if it will, are transportations going to catch up, or is the industrial average going to catch down, and how will that impact trading, right? So as of right now, it's kind of a 50-50 this week. It's not the best week. It's not the worst week. Let's go over and look at sector performance really quick. As you know, this is a big deal inside of TTI. I want you to focus on areas of the market that are outperforming SPY right now, or at the very minimum right next to there. We have financials, tech, utilities, and communications. Not the worst grouping of stocks to be performing well on the year. Most people would sit here and say, well, utilities up second most is definitely risk off behavior. I would counter and say that the largest stocks within XLU are actually risk on right now. They're nuclear-based energy companies that just so happen to be placed within XLU. So I don't actually think it's as bearish as what most people think. I think it's an extension of the AI play. For example, we're long CEG, Constellation Energy Group. That's an XLU related name, but it's just blowing everything out of the water right now. And it has direct exposure into that nuclear thesis, right? Which would play into this AI bubble. If we come into the last month in particular, we really want to focus on that April 19th pivot. What has been outperforming since that April 19th pivot? And right now it's tech. That's what we've been beating the war drums for inside of TTI off of that. Once we realized that was that the 19th, like the bottom, should we start buying? And we have been over the last few weeks. Tech was really our main focus. We've opened up a bunch of semiconductor exposure and tech exposure, but I do want to point out it's not broad-based. It's not broad-based strength yet. As we go to industries really quick, you'll definitely see where it is. It's semiconductors. I think that's where it is. Second year in a row where semiconductors are in the prime spot, the leadership spot. And I think that's important to understand that these leadership roles tend to exist for upwards of 2 years. Bulkowski's quantified that for us. He says on average, industry leaders tend to lead for about 2 years straight. And this is now we're coming up on a year and a half of semiconductors. Could this go longer? Absolutely. But this is within the wheelhouse of average. Yeah, semiconductors are outperforming by a very large margin, by the way. Year to date, up 40%, where GDX is only up 13.71. Those are your gold miners. Everything underneath has not been performing as well as it was last year, right? Q3, but particularly Q4 of 2023, saw a huge pump across basically everything. We're not seeing that same type of move this year. It's not buy everything under the sun and wait. It's definitely a stock picker's market this year. Over the last month, off that April 19th pivot, you see once again at semiconductors. TAN is up neck and neck with semiconductors. There's a lot of cross exposure between semis and solars. For example, FSLR is really broken out this week. I think it's up 40% or something this week alone. Clean energy. These are high beta risk on areas of the market. This is not necessarily bad stuff that's going on right now. So it's encouraging to see that these particular areas of the market are breaking out. We like this type of stuff. In a risk on environment, we want the riskier and higher beta stuff to be outperforming. And they are, at least right now. If you're in semiconductors, if you're in any sort of solar position, or in this right now at least, any sort of clean energy position, it's been a fantastic week for you if you've been able to hold through some of the volatility. Some of the stuff that's not performing well, that was for a little while, is some of the value stuff, particularly energy. Energy has been performing very poorly over the last 2 to 3 weeks. We were not perfect on that specific trading tranche of energy positions, but we definitely stopped adding in at the right time. We refused to commit capital to that part of the market once we realized that the energy trade was starting to fizzle out and risk was, or liquidity was starting to flow back into the riskier parts of the market. And we were able to catch that. So good job if you're inside of TTI. It's never perfect. Sectors rotate. It's not a bug. It's a feature of a bull market. We have to stay on top of it. And that's why we put out the research material that we do, trying to constantly stay in front of some of these sectors and industry moves, right? So we can see it's not bias or opinion over the last month here. It's been higher beta risk on areas of the market, semis, solar, and clean energy that have been leading the market right now. As a matter of fact, if we go to TradingView really quick, let's go ahead and start with semis in particular, just the semi space in general. That is not a bearish close, guys, right? For everybody that wants to continue to short NVIDIA, it's going to be a very, very tough time for you continuing to move forward. I mean, this is about as bullish as you can get. Not only did we break out into new highs, but we closed at high of week. Yes, the NVIDIA earning, as much as everybody wants to hate NVIDIA and talk about how much it's a scam or whatever, the market does not agree with you. And at the end of the day, the market is what pays you. It's not your opinions or your bias. It's the price on the chart. I've never seen somebody say, well, I don't think semiconductors should be at 244. I want to sell these at 280. No one's going to give you that price, right? It's what the market is telling you. And as of right now, semiconductors are continuing their upwards breakout and into new all-time highs, closing it at the highs on the week, led by NVIDIA, right? NVIDIA breaking out, and look at that, also closing at high of week. It's important to understand that this is a market that exists not exclusively for individual traders or investors' biases, right? We explain our thesis through owning positions or shorting positions, but if they don't agree with us, we have to adjust with the market. We can't expect the market to adjust with us. And as of right now, NVIDIA closing high of week, 1065. It's absolutely insane, and it's pulling everything up with it. There was a lot of talk about AMD looking like crap this week because of NVIDIA, but this is not the worst candlestick either on AMD. I expected, just reading through some of the stuff on FinTwit earlier this week, yesterday, there's no place for AMD in today's economy. NVIDIA is taking all of its cash, blah, blah, blah. The chart does not say that. And, sometimes you just got to let people say whatever they want and continue to trade your trade. I'm not necessarily trying to convince you that you need to own AMD, but what I'm telling you is there's a lot of differing opinions out there, and most of them are fucking wrong. So just continue to focus on what the charts are telling you and what price is telling you. I think the one name that we have that I'm very excited to own is TSM here into all-time highs as well. This has given us an opportunity to play the NVIDIA breakout into an all-time high without having to actually pay the price of the NVIDIA contracts. I think that's an important caveat here. we're able to find ways to get long semiconductors and reduce risk through the NVIDIA earnings report. It's not easy to do, guys. So if you're listening to this and you're in TTI, I want you to understand that the concepts that you went through and the hoops that you jumped through to grab some of these semiconductor plays prior to the NVIDIA earnings is so completely abstract to the normal investor. The normal investor or trader would be saying something like, I want to own NVIDIA through earnings because they're going to beat earnings. We both know that a good earnings report does not necessarily mean that things are going to gap up. And so what did we do? Instead of risking capital upwards of $5,000 per contract on an NVIDIA play, we diversified across a bunch of different semiconductors that were breaking out into all-time highs along with NVIDIA, but maybe had better contracts to trade. These are just trading vehicles, right? We don't necessarily want to marry TSM. We want to use TSM's chart to extract money from the market. And so we did. We bought TSM. It ended up being a fantastic trade. We still have some exposure in MU. This is an all-time high close on MU, and on the weekly at least. And we have QCOM. Check that out. Yes, all eyes are on NVIDIA, but that's not a bad 2 weeks back-to-back in QCOM as well, closing at all-time highs. We have some AMAT as well, right? So you can kind of see where we were focused on, not necessarily only NVIDIA. We were focused on building a portfolio around NVIDIA, and it worked out very, very well for us. So congratulations for those of you that are able to grab that. Now, I do want to point out that we're not entirely sure if the semiconductor play is going to continue to run another 100 to 200%, but as of right now, we have taken some profits off of the semiconductor plays. They're completely free, and now we're kind of in this big blue skies type of setup where we can hold these positions for an indefinite period of time, or at least until the expiration comes up, and continue to profit from the move to the upside. As long as momentum's on the backside of our plays, we don't want to give those up. There's a lot of focus right now going on in the BTC and the crypto space in general. I'm not going to spend too much time in the markets and focus video talking about it because we just had an amazing session earlier today. But I just want to point something out from a basic TA standpoint, guys. This is not bearish. I know it's boring. I understand that people get mad because things don't break out immediately the way that they think they do. But building a base underneath overhead supply is very rarely a bearish event, particularly when all of the momentum is going in one direction, 200-day moving average is going in a direction, and liquidity is continuing to expand in the market that you're trying to trade. Guys, this is not inherently bearish to me, and I reserve the right to be wrong, but more often than not, this is not going to result in a breakdown into new lows, guys. I'm telling you, to me, this is a coiled fractal, a continuation fractal trapped underneath this overhead supply zone here that's eventually going to give way to an all-time high pop. BTC and crypto in general has a very high correlation between the Qs, right? So we can actually just prove that. Come in here into your correlation coefficient, type in QQQ, apply. Closer you are to 1, the more highly correlated you are. I don't know how much closer you have to be to this. This is incredibly correlative, right? So if the Qs are breaking out into all-time highs, which knock they are, it's only reasonable to assume that knock Bitcoin is going to follow. So for those of you that are freaking out about a Bitcoin position or something, I just have one thing to tell you: patience, P-A-T-I-E-N-C-E. There's no Y in patience. Just be patient. If you're not trading and if you're not over leveraged within your trade, you have all the time in the world to sit here and let this thing work. And by the way, Bitcoin is not the only thing that's working. Obviously, big news this week coming out that Ethereum ETFs are going to be, or have already been, approved. You see the Ethereum big candle here, a good volume here on the pivot break as well. We're looking for a move up and over 36 and into a potential all-time high move in Ethereum. There's a bunch of altcoins that are working as well. The only one I can remember off the top of my head right now, because I haven't written this down, is the ONDO trade that we talked about earlier today. We really like this setup. They were able to grab it sub $1, and it's currently trading at 112, which doesn't seem like a big move, but a shift click up is about a 16%. This should be a free trade for everybody on the books, and this is just a very basic horizontal level break into a continuation run, right? All-time high. The crypto market is filled with these easy setups. I'm not going to sit here and say the trades are easy, but the setups are easy. It's very, very easy to draw a line across the chart and just go long above it and stop out below it, right? Lots of good stuff here. Next thing I want to talk about really quick is the dollar. Listen, guys, the dollar, everybody is focused on the dollar as they should be. This is arguably the most important chart in the market. You can see my chicken scratch down here. We're stuck in a range, but this is still a primary uptrend in the dollar until it invalidates below 100, right? Everybody knows that there's an inverse correlation right now between the dollar and the market. Dollar goes up, market goes down. Dollar goes down, market goes up. It's very simple. One thing that I noticed earlier in the week, I think it was today actually, or yesterday, was that We have this concept inside of TTI of bearish and bullish momentum regimes. We cut the RSI in half and we go, if something is oscillating above the 50, there's a lot of bullish momentum. If it's oscillating below the 50, there's a lot of bearish momentum. We don't want to go long things that are oscillating below the 50 RSI, and we don't want to short things above the 50 RSI. It's very easy. We don't try to reinvent the wheel. We trade on the side of momentum. I think that makes sense for most people. The dollar right now breaking below the 50 RSI was our first real guess that, hey, maybe something's wrong with dollar strength, which means good for the markets. You've been following our content. You know, we were super not necessarily worried, but focused on this particular continuation fractal, shouldn't say continuation, consolidation fractal, looking for a potential break above 107. It never happened. Instead, we pulled back. Well, now today we get the bounce back up into 50 and a potential beginning of a bearish momentum regime. And if that's the case, if you look at what happened back here in October, November, December, right? If you were trading last year, you know, that was a very, very good time to be long in the market. You see the dollar puked, and what happened to stocks? We ran to all-time highs very quickly. If we find ourselves in the same sort of scenario here where the dollar is going to break back down towards this 100 area, I have no idea if it breaks it or not, but if it does, and it does look like there's an opportunity here, it's the same bearish momentum regime that looks like it started back here in November, I think stocks are going to fly over the next few weeks. We also have some tailwind in terms of seasonality. June tends to be a very seasonally bullish time in the fourth year of an election cycle, so all of the data is kind of lining up for an extended push. And I'm excited to see if that actually materializes. As of right now, we're going to bring it back onto the weekly here. This is an all-time high close in tech on the weekly, so congratulations once again. A lot of that is due to semiconductors in particular. I want to point out that there is some weakness in software. Actually, software is down this week. Intuit reported earlier today it's a relatively large company within the sector, not necessarily a big trading vehicle, but still there is a big divergence right now between software and semiconductors. So when somebody says go long tech, I'm making a bunch of money, I want you to understand that there's lots of different sub-industry groups within tech, and it's not a blanket statement. For example, if you went long a semiconductor versus something like a ServiceNow, which is a big tech name, you would not have made anything over the last few weeks. You would have lost money. Apple obviously stands out as one of the names that is performing well within the software space. This is a position that we do have on the books right now. This is up hundreds of percent. I'm super stoked to own Apple. You can see that we entered here off of like the 163-ish area, drawdown way down here. But not all software is working, and as a matter of fact, it's underperforming the broader tech sector. So keep in mind that even though you can be bullish a certain sector, there's certain sub-industry groups that are really going to outperform, and right now that sub-industry group within tech is going to be semiconductors, right? The other area of the market that I'm super stoked on, even though we had a down day, down week this week, is financials. Financials continue to look really good here. We're holding that all-time high pivot. We bounced. JP Morgan, kind of the flagship name within the financial sector here, got bopped down pretty tough and then found its way back up. Very resilient name in JP Morgan. I hold a very significant position in this, so I'm talking my book here a little bit, but this is the flagship name. Within the sector. This is the largest financial name within XLF itself. When this tends to go up, a majority of XLF goes up as well. And as a matter of fact, a lot of the banks that we own right now this week might have not had the best week on those names in particular, but this is very constructive price action over the next few months minimum, right? So Wells Fargo up here trying to break out into all-time highs. I have this all-time high kind of indication here. I do want to point out there was no volume up here, so we're treating Wells Fargo as kind of like a big blue sky type of environment right now. We're aggressively adding in. You can see the ad here at 56.75 pivot. This has been a really good trade for us. It continues to work for us. We want to continue to stick with it. Charles Schwab, a little bit less of a good trade, but it is still technically working. Is there going to be a bounce here? We're going to focus on this next week. This is a free trade for us right now. If it doesn't work out, we'll cut it for a very small win. We're not going to be able to make a whole lot off this if Charles Schwab doesn't continue to break out. Bank of America, though, is a hot spot here. We did get in, and this one took its time. We actually got in about a week or two too early, and we had to sit there and wait for this thing to continue its breakout. But this is a 52-week high. And Bank of America, I don't think anybody has it for free yet because we had to sit in it for about 2 weeks before it really started to move. But it is still working its way up in towards profitability, I think anywhere between 25 to 50% inside of our group. But if anything, we're long banks. We like banks. We're not afraid of this stuff. We're continuing to open up exposure into financials. I continue to think it's going to be a bright spot along with the semiconductor stuff as well. I know that this week in particular was hard. It was challenging. But I want to continue to reiterate that trends do not invalidate off of a single move. And if you're a technical trader and you follow price, try to remove all opinion and bias from what you're doing. I know it's way easier to say than it is to actually do. The reason why I bring this up is if we bring this into the daily, yesterday felt like it possibly could be the end of the friggin' world, guys. I mean, seriously, it sucked. We gapped up off of NVIDIA earnings. and you had the tweets come out early like, haha, I told you so. Nvidia's back, bull market's back, as if the bull market ever fucking left. I don't know what people are thinking, but and then all of a sudden, just 2 or 3 hours later, it realized, today might be a bad day. And then by end of day, it was actually a pretty bad day. And it was just one of those things where you saw the confidence and the psyche of the trader and the investor on both sides get crushed. I mean, when the market opened up, bears were crushed. And by the time the market closed, bulls were crushed. It was just one of those days. And it's mentally taxing and emotionally challenging being able to not necessarily hold your positions. That's the wrong way to put it. But to test your conviction. If you know what you're doing in the market and you know what you're trying to extract out of the market, you should be sleeping and feeling a little bit better through these types of moves because you know where you're going to get stopped out, right? I had no idea what the market was going to do today. I'm going to talk about that in a second. But what I did know is it wasn't going to be the end of the world. And if we weren't breaking down into new lows or at the very minimum invalidating previous resistance areas, I wasn't going to let this stuff ruin my day. And I'm glad I did. Today ended up being a pretty okay day. As a matter of fact, for myself, I clawed back the entire loss from yesterday, and I didn't do anything. I changed to nothing today, and I clawed back the entire loss. And some of the guys inside of our development program actually made a bunch of money today on certain positions and overall in their portfolio. So yesterday's move to the downside, basically moot at this point. I don't know if it's going to continue or not. I have no idea. I do want to bring up one thing that I think is incredibly important. It's this idea, really quick, of rates. I talked about this in the newsletter earlier today, and I get all sorts of wacky emails back. I don't read half of them anymore because a lot of these guys are just, I don't know if they're just bored or what, but they just want to like email me and be mean. So I'm just like, fucking don't read half of it. I apologize if you email me and I don't read it. Reach out to me on Twitter because I got like old guys that are mad at me whenever I can say the market's going to crash tomorrow and there's going to be like the bull camp that tells me I'm an idiot. I can say the market's going to ramp up to new all-time highs. And I got bears that are telling me I'm an idiot. I don't need to read that shit all day. So I don't. But what I do want to point out is the 10-year yield has been in the past in 30-year moves to the upside. This is not a brand new phenomenon. This is the beginning of a potential primary uptrend in the 10-year yield. And this generally means if you only started trading or investing from 81 up, generally speaking, bonds and stocks inversely correlated, right? And we were in a lowering rate type of environment. We are no longer in a lowered rate environment. We are in a raising rate environment. It's time to accept reality. That doesn't mean the market is going to crash, guys. And I think that's the most important part. If we look at the Dow Jones really quick and we throw this on here, let's go. Can we turn this log and make it a little easier to read? I don't know if it's going to be any easier to read, but here we go. Look at this. If we just bring it back here. When rates were rising, the Dow was also rising. And I think that's what most people don't understand. The market is going to find a way to continue to go up. Now, I do want to point out, is it going to be the same playbook as it was over the last 30 years? Probably not, guys. 30, 40 years. For the last 14 years, it's just go long the queues and sit back and make as much money as you can being long tech. Totally fine. It worked for that decade. Guess what happened from 2000 to 2008? It was go long financials and energy. You went long tech, you didn't make shit. Post.com bubble, right? We were in a secular bear market. But I'm just trying to point out that different decades tend to have different themes. And we've had these raising rate environments and the market adapts to it and continues to go up over time. Is it going to be like buy Apple and wait like it has been for the last 14 years? Probably not. We don't know what it's going to be yet. But to freak out and tell me that the market is going to crash into new lows because rates are going up, it's just not true. It's happened before. It's going to happen again. And guess what? Rates have been going up now since April of 2020, and the markets are at all-time highs. Guys, stop complaining about the boogeyman. It doesn't exist. It's complete bullshit. So don't be worried about that type of stuff. All right? Is there anything else that I want to talk about? Bonds had not the best week, but not the worst week. Let's bring this into the weekly here. We're looking for a move above 92 in bonds and sticking it. Also a move above the 200-day moving average. I'll put this out on the daily so you can see exactly what we're looking for. We're in an environment right now where bonds and stocks are positively correlated. When bonds go up, equities go up. It's just that simple. We want to see bonds break above the 200-day moving average. I do want to point out that they are in a primary downtrend. They have been for many years. And this is, at this point, should just be viewed as some sort of dead cat bounce. There's no definitive move here to tell us that that was the bottom in bonds. And so As long as bonds aren't capitulating into new lows, equities tend to catch a bid. Let's hope that bonds, at the very minimum, just go sideways here, because as soon as the bonds start to break back down, equities tend to also shit the bed, which is not what we want. Really quick, I just want to point out some bigger wins that we had inside of the group and show you guys what we were looking at this week. Some of this stuff is going to make sense and some of it isn't, but that's the whole point. Looks like we have one of our traders, Dustin, posted his entire positions list. You can kind of see what he was looking at. 1,000%, 1,100% win on app, QCOM. This is the power of just kind of owning stuff and managing it on the way up, so you can hold this stuff for an extended period of time. This Reddit trade at one point was up like 200 or 300%, but taking profit off and keeping the last contract on. Kind of the mentality that we have to see if we can juice those last contracts. You can see overall portfolio is unrealized profit, I should say, is up 102%. He had an 11% day in his overall portfolio. You can see my stuff here, a listing of current positions that I have. Some of this stuff is stuff that I've talked about publicly. Some of this stuff is just only inside of TTI. You can kind of see what I'm looking at here. It's not just software and stuff anymore. Obviously, I have Apple, but this is a pretty diversified group of things that I'm owning inside of my one of my big boy accounts here. You can see we are not afraid to own Chinese stocks. Although some of them have underperformed. PDD is definitely the big winner here. You can see some of the TSM play. We got Dom on his second 1,000+% win this year. So congratulations, Dom, on that Dell play. He has that Dell August up 1,200% right now. You can kind of see what we're looking at through here. Throughout the week, we had a pretty good week. Obviously, yesterday was scary as shit. I'm not going to sugarcoat it. Definitely second guessing and thinking about exiting out of positions and stuff like that, but we didn't. We maintained our composure. As a matter of fact, a couple of people were day trading yesterday, day trading the action instead of taking the day off like most of us did. When we see a big down day in your swing traders, there's really not a whole lot you're going to want to do other than potentially stop out at end of day. If things are getting stopped out, take your stops, move gracefully to the next idea. But we weren't getting stopped out, so some guys took advantage of it to juice their returns through some day trades. But you can see some of the positions that were in here. It's a nice group of positions, right? I think May 20th was the first one, and you can see some of the losers on his book as well. But overall, a pretty good week for us, right? Nothing to really like write home about. It wasn't the best week we've ever had, but it definitely wasn't the worst. And trends are still remain up, guys. This was not the worst close on the weekly. It's kind of been different. Assets are 50-50 right now, but the primary trend is to the upside. We're through most of the ER. We don't have anything else to really worry about. And like I said, we're in the fourth year of an election cycle. I'm going to talk about it on the Sunday or Monday newsletter. Guys, this is seasonally a very bullish time to be long. And you don't have to love it, and it's not 100% like for sure. But if you average out, going back to 1949, the fourth year of an election cycle, these months leading up to the election, for political reasons or not, tend to be very, very, very bullish. So I hope that you held on to your positions. You did not stop out early and try to get cute. Let the market stop you out. Don't try to outsmart it. All right. My name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. Let me know what you think. Are we going to continue to break out into all-time highs? I think yes. And let me know when you think crypto is going to break out into all-time highs. I think it should be soon. I'd love for it to happen this weekend. Probably won't, but it would be great if it did. Hope you guys enjoy your long weekend. Happy Memorial Day. Stay safe, and I'll talk to you on Monday.